Welcome to Trading Nation. I'm Mike Santoli. Shares of Caterpillar surging Monday after the U.S. and China reached a temporary truce in the trade war. Bank of America upgrading the stock today as well. So does Caterpillar have 9 lives, or is this just a dead cat bounce? Joined by Wald of Oppenheimer, Boris Schlossberg of BK Asset Management. Not sure if those are the only two choices, Ari, but how does the setup look to you here? You know, well below its highs, but it has had a sharp snapback recently, Cat.
Yeah, I think in general, talking about the lead and the pausing of the U.S. Of this trade war here, I think it should be good for the stock market. I just don't think Caterpillar's the way to play it. I mean, in general, we are cautious on capital goods stocks that are exposed to the global economy and what we see as a decelerating macro backdrop. So for Caterpillar, here's a very deep cyclical issue that's bouncing back after really trending lower for much of 2018. I think if you're buying this stock, you're making the case that the global backdrop is bullish and it's going to help these ongoing market rotations, and Caterpillar could benefit from that. What we instead see is a stock rallying into very formidable resistance at around $142. This marks the stock's both its falling 200-day moving average as well as its Q1 lows. Consider most U.S. markets are above their Q1 lows. So we see that as a sign of relative weakness, and that strength should be sold.
Boris, what do you think? It really is a call on whether it was strictly the trade and tariff fears holding this stock back, or whether, in fact, the market is saying the cycle may not have too much longer to run for this type of company.
Well, if you look at it on a value basis, it's actually a pretty good value proposition. It's only trading for 10 times earnings. It's got 8% free cash flow. Its book of business is pretty solid. But as you mentioned, it is really driving the stock on two big macro factors. Number one, the fact that the Fed seems to be easing its monetary path cycle. And therefore, if it really isn't going to hike rates as much as the market thinks in 2019, that's positive for Caterpillar, which obviously has a lower cost of capital as a result of this. And the second thing is everybody's noticing is, of course, the U.S.-China trade relation tension that is easing right now. Now, both of those things, I think, provide a very strong tailwind for the stock right now. That's why it's snapping back. But if those things change, if the dynamic for those things changes very quickly, the stock goes right back down, irrespective of its own internal fundamentals.
Yeah, it all really is coming down to just how much deceleration the world sees in 2019, if any, for a lot of stocks. Guys, thanks very much, Boris and Ari. Thank you for joining us, and thank you for watching Trading Nation. I'm Mike Santoli. We'll see you next time.